Hello everyone, welcome to this episode of Market Pulse. I'm Ajit Mahuli, the founder and mentor at Learn Price Action Trading. Let's take a look at what index has been doing and is likely to do in the coming week. That's Nifty on the monthly chart. Again, this is a 3-monthly chart. That's a monthly chart. As expected, we moved down all the way up till 17,400. Now, smaller time frames will hold more clue, but the next few days will be crucial for what the index is likely to do, whether it's going to remain range bound or continue the slide downwards or make a pullback all the way to 18,000, 18,200. But the monthly trend is up. As I already said, this is not a great demand zone for us to be a buyer. The original demand zone still stands at this area. That's a monthly demand zone. So that still stands. So can it come here? Well, this point on smaller time frames will decide. On the weekly chart, if you see, we have broken one weekly demand zone. We did dip here at the drop base rally demand, although it's like a very big demand zone. On smaller time frames, you'll have clear ones. So now we have clear authentic supply zones here on the weekly chart. So that is probably going to be the top, even if market rallies up in the next few days. That's where you will see again issues coming in for the index to move up beyond 18,200. So even if we move up here, there could be a good possibility that we may move down. Plus, we have the budget and Fed result, plus this new market volatility, increase in volatility due to Adani stocks will need to be seen in the next few days. So trade carefully and cautiously. It's too low on the curve to go short. Shorts only above 17,950 to 18,000. On confirmations, you can look at going long. The next best area. So now if this supply holds and if we are able to break this, that's the area where I expect the index to easily float to about 16,000, 16,200. There are two demand zones here. That's the one and this is the second one. So about 16,200 could be the next target for a move down, but we are still holding this area as of today. And on the daily chart, though there is no clear demand zone from where we are moving up, it's just at this gap area which broke out of that consolidation move and gave a new high in the Nifty. Now that could also well act as a area where it will probably move up to 17,800, 17,900. That's where we have new supply zones coming in. So low end of the range we are right now in, though there are no great demand zones here. It's the gap that is acting as an area from where it is going up. A quick look at the 75-minute chart will probably tell us what demand zone are we talking about on the smaller time frames. So it's this, the origin of the entire demand zone from where. So that's the demand zone from where we had a very nice rally up all the way. And we tested it. We literally breached it today, but look at the move. So maybe this could be a decoy to hit all the stop losses for people and move up quite effectively. So that's the area where we'll at least try to make an attempt to go before the budget season. So that's number one supply zone where we can head towards, and the next supply zone is all the way. So I would rather say this is the main supply zone. So these are the two supply areas which could now act as speed breakers for the price to move up. This is going to be confirmation shorting here, depending on when we come here. But I won't short it before the budget unless we are somewhere in this area. But it makes sense to do some intraday longs tomorrow and day after tomorrow if we get a pullback. Markets might look like they have made an intermediate or a temporary bottom and heading towards 17,900. We had a very big fall, so a technical pullback is quite likely. Coming to Bank Nifty has behaved exactly the way we expected it to behave. Let me just delete these. So that's the main supply zone. And now we have a sort of monthly supply zone created tomorrow. This candle will be closing. The trend is still up. No demand zone inside till this 33,000. On the weekly chart, we have broken some demand areas here, and that's the main weekly demand zone from where the last time prices rallied and again broke this supply and went and gave a new high, though I'm not very convinced about these moves. So we would probably eventually see it coming to 38,000, 36,000, and the best area of demand zone would be somewhere here, just like Nifty, about 34,000. Okay, so these are the two good areas of demand zone. Now, this could be a technical pullback coming from smaller time frame demand zone, and on the daily chart, if you take a look, that's the area from where we broke out and went up all the way. So maybe somewhere in this area, we have a smaller time frame demand zone from where prices are moving up. If you see, pretty overextended from that supply, and plus two big red candles. So path of least resistance is also to the upside. If not 42,000, 42,500, we could at least see it making an attempt to move towards 41,400 to 41,500, which will also offer a good reward to risk to us. So if I show you on the 75-minute chart, that's a beautiful, nice demand zone, again, similar to Nifty, from where everything just, the entire rally started. So we again pierced it, went down lower. That's a lower demand area. So it pierced that and came to this area. So that's what we're seeing. Once we go above 40,900, we could probably see an acceleration towards 41,400, 41,500. That's where the next supply is. And in case of Bank Nifty, there is a good probability this supply might hold unless budget or the Fed gives them a different news, which will be good for the markets, and that's the main original supply zone at about 42,700. So pretty good reward to risk if you get a pullback tomorrow somewhere close to these areas. Let's say that's a nice demand zone that has got formed on a smaller time frame. So if you use this demand zone to play an intraday game, the profits are quite nice. I mean, the reward to risk is pretty good as compared to a short trade as of now. So we could at least have some intraday move from 40,000, let's say 40,000 to 40,800, 800 point move, and you can trade this if we get it tomorrow morning. All right, so that's what we have. So pretty low on the curve, oversold, overextended. Avoid new shorts. You can cover up your shorts if we start moving beyond this, and maybe in some intraday or short-term income longs are a good idea. Taking a look at the India VIX, as again discussed last time, we did go up all the way there to 18, 19, and index fell to our, in fact, index fell more than what we expected. So I actually had to leave some money on the table, unfortunately, because I covered a lot of my shorts on Friday itself. But this is also nicely moving up and has encountered some areas of supply from where it broke down. Maybe a pullback in the India VIX could propel Nifty Bank Nifty indices slowly towards the upside, and then it'll again fall in place. So probably that's the area of demand zone I would be looking at to hold, number one. And that's a number two demand zone, which could still hold up for India VIX. Right now we have just pierced it, but we did not close above it. We came down, so there could be a movement like this coming in this India VIX, which will take Nifty again probably to 17,900. So slightly bullish bias, but only for short-term income. No swing shorts till we reach the other extreme of the range.